Hi, welcome to Charts Chatter with Chatur Charts, the 10th June 2022 edition. And had been a really solid bear market day today. The Nifty index shaved off nearly 276 points from its previous day's close, and Bank Nifty lost about 600 points, followed by the US sell-off. In fact, it was closely tracking the US, which knocked off more than 660 points the previous day on Thursday. And here we are staring at one more round of correction. So what led to this brutal sell-off is the inflation peaking in the US and the apprehension that the Fed rate hike in July is going to be even more than what was expected. So the market was expecting about 50 basis points to 75 basis point hike. And now there is a talk of even someone proposing to go 100 basis point hike. So this is something that has completely rattled the markets and brought down global equities, including India. FPIs have been continuously pulling out money from Indian markets and from the cash market, of course, and that is one reason why our VIX is not reflecting a true picture of what the reality is. There is a misconception in someone's minds that if VIX is, since VIX is stable at the 19 to 20 level, our markets may not correct that badly. VIX represents only the derivative part of the volatility, and hence does not include anything that goes out from cash markets. So let's look at our own indices and see where we are heading to, and what are the other asset classes that may gain ground in this period. So this is the Nifty chart, and as you can see, key supports have been broken. The 20 EMA at 16,294 has been taken out, and index has plunged to 16,201 on a closing basis. So when a 20 MA is taken out on a closing basis, that really spells that there's going to be some sort of a correction. So in order to understand what could be the depth of this correction, I tried identifying as to what could have been the pattern that has led to the fall. So the earlier day, Nifty gave us some promise of a breakout. Now on the hourly charts, if you can see, on the hourly chart, this was the breakout candle that we had discussed, and it had closed above the rising channel resistance line, and it appeared as though it wanted to kind of break out. But one single night's events at the US in the US markets led to a severe or bad pre-open, and thereafter the market simply caved in, and now it has even broken down out of the support line of the falling channel. So on the hourly chart, what seemed that could be a probable inverted head and shoulder pattern actually had its genesis in the form of a harmonic Gartley pattern that actually earlier got created. So if this pattern has to be analyzed, what it simply means is this is another Fibonacci pattern, and the probability level of these patterns are very high. So amongst the 8 odd Gartley patterns which are bearish and about 8 patterns which are bullish, so you will have harmonic Gartley patterns, both of the bullish kind and the bearish kind. But this is a bearish kind of a harmonic Gartley pattern, which suggests that the eventual fall of this index could probably be to test at the lowest level from where this pattern of point A has begun. So the point A point is at 15,769. So if you kind of round it off, so 15,800. So probably it is pointing to a situation that Nifty may eventually correct to 15,800. So right now, yesterday, it closed at 16,201. So eventual fall in stages could take it to 15,800. So a retest of 15,800 and may even be below that is a possibility. But for that to happen, it has to first take out all the horizontal support levels. And at all support levels, it will find some buying that will happen, and the mutual fund money to keep it propped up but we'll have to see whether the selling intensifies as the US markets kind of ease out. And with July now coming in, it's going to be really, really tough days for the equity markets. So we've got to be very watchful of how the events unfold. So in order to understand how exactly will the fall take place and what levels have to be watched for, let's draw a inverted Fibonacci retracement tool. I'm sorry. Now, based on this, we see that the 23%, the 78% retracement that was at 16,631, and the 38% retracement was at the 16,362, and the 50% retracement was at 16,248. So all three levels have been taken out, and the index is precariously standing at the 78% retracement, which is at 16,169. So if this level is taken out, probably it will straight plunge down to the 16,000 levels. So these levels have to be watched out, and accordingly, it has to be determined how to kind of trade in these markets. So let's try and see what's the situation with Bank Nifty. Unlike a harmonic Gartley pattern that was seen on Nifty, what has been spotted here is a harmonic butterfly pattern. It's a slightly different pattern with different Fibonacci ratios. So, but this is the kind of the main trigger for Bank Nifty to also came in. So if you recall, Bank Nifty attempted to get past the 36,000 level and broke down from that level. So the main kind of reason or the trigger for this fall was the harmonic butterfly pattern that got generated, where all the ratios were kind of successfully met. So like Nifty, Bank Nifty might also kind of came in, and it will be first probably test levels as low as 33,000. So another 1,200 point kind of a cut is possible. And if that's broken, probably it might retest the 32,400 to 32,500 levels also. So these are kind of signs, early signs of a kind of a correction that might happen. We'll have to again watch it closely. And so what are the other asset classes where it could show some opportunity to trade on the long side? The last time that we had seen the dollar index, it was at about 102. That was about 2 or 3 days back, around the 5th or 6th of June. And in just 2 sessions, the dollar index has strengthened to 104.5. So this is a very precarious situation, which clearly indicates the strength of the US dollar versus the other currencies. So as many of you must have heard it, the US inflation rate has peaked to a 40-year high of 8.6%. So which actually translates that the year-on-year increase in inflation is 8.6%. So for an average family in the US who used to spare, they will now have to spend 450 US dollars per month extra to take care of the family needs. So that's the kind of the hit that the family will have to take. So the inflation is kind of peaking, and this will probably trigger and force the Fed to hasten the process of liquidity tightening and rate hikes even more aggressively. Now once in July for sure, and very, very aggressively maybe in September. So US dollar index, the direct impact of the US dollar peaking is the USD INR pair. The previous time that we had analyzed it about 2 weeks ago, you would recall that we were about in the last week of May when we were kind of analyzing it, and it was forming these sandwich patterns and determining as to what it wants to do. But now with the US dollar index kind of strengthening, the USD INR pair is raising its head again, and it made again a new life high yesterday of 78.20, and before closing in at 78.11. Our own analysis of the USD INR pair is that probably it might first test a level of 79.4. And if that level of 100% Fibonacci is breached, it might enter the 1.272 Fibonacci ratio range, which might take it well past the 80 INR per dollar figure, which is very, very scary. And this is also triggered by a sharp rise in Brent, which exactly 2 weeks ago when we were analyzing it, and we had kind of projected an overall jump of about $26 per barrel. Since then, uh, the Brent oil index has climbed up more than $10 per barrel. So when we were kind of reviewing it, it was about $110 to $111 per barrel. And the high this week has been 124.40 before a mild, kind of a sell-off and eventually settling down at 122.01. So these are very scary times. And Brent oil, if we were to peak again and retest the previous high of 130 or 139, Nifty had collapsed on 7th of March to test 15,700. So these could be very, very kind of tough times. So the entire message is to trade and invest with caution. So let's watch out as to what is in store, and keep using these analysis, to kind of direct our trades. If you have any questions, if you have any comments, any suggestions, please do mention, and I'll be happy to discuss and take it up. I hope you do like this video, and please press the like button, and also share with amongst others in the trading community. Thank you so much, and have a great weekend. Bye bye.